What is going on, investors? Hopefully, guys are doing well out there. It is Friday. It's time for the weekend. It's time to do a little slap to the FTC from corporate lawyers over at Microsoft. And it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, which really just seem like they have anti-gravity bodysuits on. These stocks keep going higher and higher and higher. And we better kick things off like we always do with Meta Platforms. Start of the week at $297, continuing its massive run off the lows. The 52-week lows on this stock is $88. It's currently sitting over $308 per share. That's after the company Mole's launching its own commercial AI model. Now, the company does have a quote, we'll put this in air quotes, open source model that was released to researchers and academics, but it's fairly widely known that this is a model that pretty much anybody can take and use. Now, you can't necessarily use it for commercial purposes, like try to make money or anything like that. Maybe more like an Android. And I actually think that's the direction Meta is trying to go. They're trying to create maybe like the Android for large language models. And I actually think that's going to be a very good strategy, because you look what Microsoft's doing. What are they going to do? They're going to roll OpenAI into all their own proprietary systems and Microsoft Office and Bing, and Google's going to do the same thing. They're going to kind of silo this off. Eventually, maybe they get out there to kind of the open source type stuff. Meta's going to be able to get there a little bit faster. That's a competitive advantage for them. I like what Meta is doing here, how much money they can make off a commercial AI version. They certainly could maybe wrap that into maybe a cloud offering or something like that. There's some great opportunities here for Meta, and I like that they're focusing on this rather than those goggles that you buy once and you never put them on again. Meta to fight EU antitrust allegations. In its Facebook Marketplace case, the EU is alleging that because Meta Platforms put a button on their app to take you to the Marketplace section of the app, that it violates some kind of anti-competitive law and was not nice to the other classified ad services in the EU. My guess is EU regulators have got some classified ad people putting some money in their pocket, and this is why they're going in that route. Mark Zuckerberg took to Threads earlier this week, saying that Threads crossed 100 million signups over the past weekend, and that is one of the fastest signups in history. I think really the proof will be in the pudding later. It was very easy to sign up for Threads. A lot of people that have their own Instagram accounts or essentially their own identity or their brand is tied to whether it's their own personal name or they have a company name. Obviously, you're going to, look, this is Meta, so you're going to sign up for these. You're going to take the 2 to 15 seconds that it took to sign up for this, and you're going to sign up for it. But can it sustain a large amount of active users? That's something we'll have to remain to be seen. And again, Meta is now an over $800 billion company, so they actually need quite a few users in order to make this useful. Now, the other tie-in here is, look, if you're going to launch commercial AI products and models, this Threads app, it doesn't have to get that much usage to make it useful from an AI training perspective and a data perspective. So Mark is really connecting the dots. And while I've been critical about him on the channel as it relates to the Oculus and the metaverse, he's firing on all cylinders right now. Meta's Threads may bring 5% revenue upside as it grows to Twitter's size. Twitter has roughly 240 million daily active users. 100 million people signed up for Threads in the first 3 to 5 days. Again, this is going to come down to the number of actual people posting every single day. The other thing that we haven't really thought about with Meta is, okay, if you're posting on Threads, is that taking away the time that you post on Instagram, where there's actually serving ads and you have monetizable asset base over there. And so in some ways, could Threads simply be cannibalizing what they have already in Facebook.com and Instagram and maybe WhatsApp to a lesser degree? That remains to be seen. I am skeptical that this scales up into anything other than just a very weak competitor compared to Twitter. If I am wrong about that, you can pull that clip out and replay that, I'm sure. MetaMole's bringing branded content tools to Thread. This is very similar to what they have over on Instagram. It allows brands and content creators kind of integrate these things and maybe make a little bit of money. Speaking of money, moving on to Apple. Start of the week at $189, drifted just up a little bit. Then the week over $190 per share. We got that $3 trillion market cap on the company. Now, the only news that we saw across from Apple this week is global PC shipments dropped less than anticipated in Q2. They dropped about 13.4% year over year, with Apple as the only brand in the universe that they track. Lenovo, HP, Dell, Acer, and then maybe some other kind of brands out there. Apple was the only one that actually saw quarter over quarter or year over year growth when it came to market share expansion. Anybody that's used Apple laptops probably explains a lot. They are fantastic. Moving on to Amazon, start of the week at $127, up over 5.5%. Finished the week closer to $134 per share. This is after Prime Day set a retail sales record, although Amazon says this every single year. They said they sold about 375 million items and the customers saved about $2.5 billion. These are data points that Amazon gives us. I don't know if I really believe them. They always come out with a press release and say that Tuesday was the biggest sales day in its history. Guess we'll see when we get quarterly earnings reports for Amazon where these fall in. Adobe Analytics, so essentially kind of a third party, said shoppers spent $6.3 billion on the second day alone, and that the average order size ticked up from $52 and some change last year up over $54 per order. But again, a lot of that probably has to do with inflation. iRobot and a host of other companies looking to be acquired gained this week as Microsoft won a big, gigantic case. You also had Qualcomm as well complete a merger where the FTC is just got fried eggs all over their face, and this could unleash a whole big wave of M&A. And I tell you what, look, you can have your own opinions on M&A and monopolies and antitrust. This is the investor channel, and these companies have tens of billions, in some cases hundreds of billions of dollars sitting around, earning a good interest rate at the current time, but pretty much sitting around and doing nothing other than buying back the shares and paying dividends every once in a while. Well, if you can go out and you can buy growth and you can buy companies and buy profits, yeah, this is going to be an exciting time for these companies. Moving on to Netflix, start of the week at $442, and the week essentially flat to finish the week right before it reports their earnings next week. We also got Tesla next week, Johnson & Johnson. Some of you are probably wondering, am I going to do a JP Morgan video? Yes, this weekend I will get to JP Morgan. I am committing, and I am absolutely going to do earnings videos, as many as I possibly can. My employer, link down in the description down below, Brownstone Research. Very excited about the channel, very much on board with what I am doing here, but I didn't sleep very much last night, so I think I'm going to finish this video, take a nap. If I have bandwidth, I'll do JP Morgan today, but we'll get to JP Morgan tonight. Moving on to NVIDIA, start of the week at $426 per share, and just fittingly, the stock that year to date is up 217% over the last 5 days, up another 6.7%. Finished the week close to $455 per share. Workers building that Taiwan Semi Arizona plant reportedly hit with a pay cut as Taiwan Semi is ushering over workers from Taiwan to help out in the build out and the ramp up and basically get workers over there with experience. Well, it looks like they might not have to be paid as much as the United States worker. So we're onshoring with offshore work. I don't have a problem with this, only because, look, these fabrication facilities, these, like, from the outside, it looks like not look like a normal building, but it doesn't look that fantastic what they're doing inside. The I'm not breaking any news here. Okay. Chip manufacturing, like the actual manufacturing of the chips, is absolutely some of the most skilled things done on the face of the earth. So I don't blame Taiwan Semi, who's investing, over $40 billion on the site in Arizona, wanting it to be pulled off well. Recursion stock, which ticker symbol RXRX, that's a pretty good ticker symbol, soared on a $50 million NVIDIA estimate, or should I say investment. So NVIDIA took $50 million out of its pocket, put it in the pocket of this stock, which had a gigantic, it just soared, and it sold off a little bit today, which is kind of natural given the move that the stock just made. Give me a second here. So here's just broadly how I'm thinking about this. Is NVIDIA basically made this investment because this Recursion company will utilize NVIDIA's cloud platform to train its AI models on very, very large data sets for biological and chemicals, trying to create maybe like different types of drugs and those types of things. What we know about NVIDIA's, and this is NVIDIA's own proprietary cloud platform, where they're actually trying to get out there and market this. This is probably, I would assume, NVIDIA is doing this to create this is already a pretty well-known use case, that if you have large data sets when it comes to biotech and medicine, that you're going to be able to use NVIDIA's GPUs. Well, in order to kind of maybe speed that up, you make a small investment, and $50 million to basically a $1 trillion company is more or less a rounding error on almost anything that NVIDIA does. Well, you make a small investment here, you get this company on board, you probably reduce the cost, or maybe you sell maybe you're not even charging them to run their data models on your cloud service, and then you'll be able to create white papers and examples and presentations, and then the other biotech industry. Because what we know about NVIDIA's cloud platform, it's incredible, okay? If you're trying to run some kind of AI application or something that you're running like a blockchain or something through these GPUs, or certainly something as Recursion does, but it's not Microsoft Azure. It's not Amazon AWS. It's not the Google Cloud. There are a lot of advantages to the traditional cloud providers, and NVIDIA is trying to find the market where they probably have the greatest competitive edge and probably the most clients that will utilize the NVIDIA cloud. Now, moving on to Google. Start of the week at 117. It said, dude, were you saying my stock was about to reverse? Nope. It's up 6.5% to reverse all the way back up to $125 per share. Just the resilience of these stocks over the past, 8 months has been extraordinary. Google jumps after launching an AI bot, it's Bard, in Europe and Brazil. On my Google search, I clicked the little experiment thing. So now when I do Google search, like the AI thing comes down. I think Google is going to have some very interesting products when it comes to AI. And I'm not breaking any news there. And I think it's going to be a big part of what this company does, obviously. Now, Google Cloud exec said to leave his management responsibilities after 24 years. This was the 8th employee over at Google. He spent 25 years with the company, and I don't blame the gentleman for wanting to ride off in the sunset a little bit. SoftBank's ARM. ARM is the chip device that is essentially licensed in all phones, including all Apple devices, all chips, CPUs, microprocessors inside of Apple's phones are based on an ARM architecture inside of a lot of, or not a lot, but in all the PC kind of laptops and computers are all going to be Intel or AMD x86 basis. Now, ARM was trying to be acquired by NVIDIA. That was probably the last significant case that the FTC, and maybe the FTC might have done it, but the world essentially said, no, NVIDIA, you cannot buy ARM Holding Company. Instead, SoftBank is trying to take the company public this year. It is looking for, quote, lead investors. We've seen rumors that potentially maybe that will be Intel. NVIDIA is holding firm at a $35 to $40 billion valuation in this marketplace with the type of hype that ARM would get. They want a value, I don't blame them. They want a valuation closer to $80 billion. I think when we look at the financials of ARM, we are going to think $80 billion. Again, this company just makes money strictly on licensing fees, and its number one license holder, Apple, has a perpetual license, which I actually don't think is very significant to the company from a revenue or a profit perspective. I actually think NVIDIA is probably pretty accurate to only want to pay $35 to $40 billion. Imagine NVIDIA beating you down on valuation, a company that clearly has an extraordinarily rich valuation. We'll be talking a lot about ARM Holdings in the coming weeks ahead. Moving on to the big story and the big company of the week, Microsoft. Started the week at $333, up 3.6%, finished the week over $345 per share. That slapping sound you hear is Microsoft's corporate lawyers going to the FTC lame ducks and political hacks that are running that organization. And they said, yeah, we're going to buy Microsoft's $69 billion acquisition for Activision is going through, according to a judge out here in the great state of California. There might be some unsafe places. There might be some wacky rulings every once in a while. You might be able to go into a Walgreens and walk out with half the store and not be a criminal, but you sure as heck can't do a sports bet out here in California. But one thing is for sure, the judges out here, for the most part, are actually pretty darn good when it comes to corporate law, and I am so proud that Microsoft looks like they're going to be able to complete this $69 billion acquisition. Now, might be putting my foot in the mouth because by the time this airs, a judge could potentially grant the FTC a stay in this case. The FTC did request for a temporary block, but the judge absolutely denied that. I am not an attorney. I am not a judge. It is possible FTC gets some kind of stay in this case, but I tell you what, once you get that initial ruling, it is pretty tough after that. It's pretty much over. And if you look at shares of Activision, the market essentially agrees with that. Analyst chimed in and says Microsoft got its, quote, trophy moment with his Activision court win. Yeah, at this point, I don't know. Like, Activision's a great company. They were positive from a revenue perspective, from an earnings perspective. Like, it will show up, like, as big as Microsoft is. The Activision financials will actually show up on the financials to a certain degree. But at this point, after this long, it was more about putting the FTC in submission. And that is what is happening. And guess what the company did? They decided to lay off sales, customer, and support staff. This is in reference to Microsoft as a new fiscal year begins. So you complete a $69 billion acquisition, and then you immediately go lay off sales, customer support staff, which probably their job is at the very least being augmented, if not replaced, by the technology over at OpenAI. Microsoft, Broadcom, I think I said earlier, Qualcomm, completed large deals and large acquisitions as megacap M&A is back, according to Jefferies. And again, this unlocks a whole lot of things. And I know some of you guys come to this channel and you've got your social justice hat on. You've got your political hat on, whether it's Democrat or it's Republican, or you're trying to care about this or the environment or whatever. This is the investor channel. And like it or not, I do you a disservice if I come here and give you anything but the capitalistic corporate greed, stock market greed perspective. You can put on your ESG hat. You can put on your social justice warrior hat. By all means, it's not going to offend me. In a lot of ways, I respect you. And maybe in some cases, I actually agree with you. But like I said earlier in the show, these companies have tens of billions of dollars, in some cases, hundreds of billions of dollars sitting on the balance sheet. The only thing that they can do is buy back the stock. What is Washington, D.C. doing to buybacks? They're starting to tax that. Dividends are already taxed. A lot of these companies are based out here in California. try to build a headquarters or build a manufacturing facility out here in California and actually try to build something. It's pretty darn impossible. So the way these companies are going to grow from a revenue and a profit perspective is the good old M&A. And if they're winning these tough, long battles in court, it's going to embolden more and more companies to do this, because it becomes easier and easier to argue these cases in front of judges when other judges essentially give you the case law to do it. I am so excited about this from an investment perspective. It is going to unlock the cash on these companies' balance sheet that is literally sitting there doing absolutely diddly squat. They're going to be able to go out and look, if you own kind of mid cap and small cap companies, those are going to be some of the targets, okay? And the valuation of those companies have started to run, and some of it has to do with the fact that billions, tens of billions, hundreds of billions of dollars, these companies want to leverage their stock. They're going to be able to go out and acquire some of these names thanks to the bold moves of Meta and Microsoft in particular in the court of law against the FTC. Moving on to Tesla. Start of the week at $274, up 2.6%. Finished the week at $281 per share. Tesla eyeing producing 500,000 vehicles a year locally in the great country of India. Seems like Tesla, what they have in the works is they've got the Mexico Gigafactory. They're still kind of scaling up what they've got going on in Berlin and Texas, but those seem to be maybe not running at full capacity, but they're probably edging up into that range. I saw a report earlier this week that looks like they want to maybe expand capacity in Germany at some point, maybe get that up to closer to 1 million cars. My guess is Tesla will continue to reinvest in the Texas factory, as they probably got a good amount of space around that. Elon Musk unveiled XAI to understand reality and the true nature of the universe. I love what Elon Musk does. He always starts a new company, and maybe there's some lessons that we can take from this. He could have rolled this up into Twitter. He could have made this a part of Tesla, probably. He always starts like a new company. They all intertwine just a little bit. Like if you look at his Boring Company, where he's drilling holes in the in the earth, well, it's kind of tied to Tesla, because if you go out to Vegas, you can take like a Tesla through there. This AI idea is likely going to harness and leverage a lot of the data that is being spewed onto Twitter. It's something I'll probably talk about on my newsletter next week. Link in the description below to that. Moving over to the technical segment of the show. Things are straight up in an air. We've been anticipating, a resumption, like a pullback resumption of the trend. Maybe not all the way to the bottom of the channel, but like halfway to the channel usually is pretty reasonable. No, we are this thing just wants to hug these highs, not necessarily anticipating this, but it brings in actually I don't want to say the strong probability, but there is probably a strong likelihood that, the sellers are gone and you push to new highs on the S&P. We're looking at the S&P 500 here. A lot of these FAANG stocks and tech stocks are already at highs or higher than that. Those will continue to drag the S&P 500. The opportunity is probably in the small and medium cap stocks, as they'll capture a lot of this move if this happens. And look, maybe we're wrong and it doesn't happen. A pullback on the S&P 500 south of even 4,200 should be bought, period. Moving on to Meta, parabolic move, close the gap. Now we're pushing up through resistance. The all-time highs up here, and this is a round number, at about $385 per share. Guys, at this point, I'd be shocked if it doesn't get there, and maybe that's the sign we've finally topped out, that I don't believe these stocks have just exhaust. I mean, this is just, look, this kind of rally, you just don't, I've been doing this for 20 some odd years. It's pretty rare to see this in companies this size. Smaller companies, yes, it happens quite a bit, but like companies this size making these down moves and quick reversals is just a thing of beauty. Apple looking like maybe we're starting to hesitate up here. Lower highs, pull back to trend. I don't know if I'm willing to say the rally with Apple is over, but a back test to the previous highs back down here at 180 would be healthy. Whether or not you buy up there, I mean, I guess you could play what I would do, you know, and again, if you're a longer term investor, you're just kind of looking at these charts for fun. Some of you guys are in the shorter term money, and that's really what this segment is more or less for, or time, maybe larger scale purchases. Apple pulls back to the highs. I would have a stop loss down here, maybe $5 lower or so, and you're playing a bounce to new higher highs, so maybe up to 200. So you're risking like 5 to make 20. That would be a very solid risk reward. Again, that's if we get the pullback. If Apple continues to do what it's been doing, and well, it's gonna just go right to 200 before it even pulls back. Moving on to Amazon. This one, ooh man, pulling there. You know, look, we've been pointing out this resistance area. I probably should have put it in a box a long time ago. On the low end, there's a couple of little spots here where it found a little bit of support at 135. It goes up to about 145. These are areas of the chart where you'd expect Amazon to want to take a breather, although I think we said that for the last maybe 2 months or so. Moving on to Netflix. This one looks like it wants to close this gap, but complicating the situation is you have Netflix reporting their earnings just 5 days from now, and I will look forward to bringing that video to you on that day. You know, look, the stock, I think, will want to just pause here until you get to earnings. A prudent thing to do when you're 5 days away from earnings. I don't care if you're bullish or bearish a stock. Just wait. It's not that, you know, it's not that long a period of time. If you're bullish, and look, some people are like, well, if I'm bullish and it gaps up in the after hours, I've missed this move. I would not think about it like that. I would just think about it as the bullish move confirms that the bullish move in Netflix is still there. The stock's very volatile on earnings days. I've seen this one, you know, we've seen these large gaps in the charts actually created on earnings. You get a large gap down, and then that creates maybe better buying opportunities, or maybe confirms something different with Netflix. Moving on to NVIDIA, this one just breaking out at the top of the channel and moving higher. Man, this is just telling me too that there's sophisticated, and this may not be sophisticated investors buying up at this range. It's not overwhelming volume, but it's also telling me that sophisticated investors probably are not selling NVIDIA at this range. That is telling you that the channel checks, and people are doing channel checks on this company, but, you know, making sure demand is still strong for its products, not just in this quarter, but subsequent quarters, that it's probably, honestly, probably off the charts. You don't get earnings for NVIDIA until the 23rd of August. Moving on to Google. We thought we had a little bend at the end on this one. It definitely did break kind of and break trend. You're breaking basically a straight arrow 90-degree upward trend, and you finally did break that. Well, it reversed it and came right back up into resistance. If you were trying to buy the dip in these stocks, you have like hours to do so. These stocks are reversing very, very quickly. A retest of the highs. I mean, this is when these stocks will finally reverse, so maybe this is why I'm saying this. A retest of the highs for Google seems likely, honestly. Same thing with Microsoft. A little bit of kind of a flag out. Again, not quite at a 90-degree angle uptrend, but you more or less broke that trend, and now you are back testing or retesting the highs that the stock made back in 2021. A move higher on Microsoft, and you're looking at levels probably up into the 360s for that. And then finally, Tesla, needless to say, is also looking pretty spectacular. I would say with Tesla, you have the cluster of highs right here, and we'll call that at, you know, $310 per share. It's a little less than that. Stock's currently sitting at $281. The company reports their earnings on July 19th, the same day as Netflix. You're looking for, with Tesla, to push higher than that 330 level. If you get a pullback and Tesla, you know, is volatile, needless to say, get a pullback on those earnings, disappointing margins. I think the volume, we already know how many cars they delivered in the quarter. Now it's just a question of what the volume is going to be, and then maybe if Elon Musk gives some hints and stuff on the conference call. Usually Tesla's earnings conference calls are somewhat anticlimactic, since you already know what the company has done from just a a gross model perspective and what they've done with pricing, we know that the gross margins and the operating margins likely not going to be where they were, say, maybe a year ago. Pullbacks in Tesla, I would say even south of 230 could be bought. A back test of, we'll change this dark green line to orange so you can clearly identify it. A back test to that trend line somewhere in that range too. Also, the convergence of both of those, and I'll make both of these lines orange. A convergence of these lines would be a exciting opportunity from an investment standpoint. You put your buy in there, you have a stop, somewhere lower than that. If the stock is going to bounce, it's probably going to bounce hard off two areas of support, and you're likely going to retest highs, maybe risking 10 to 20 to make maybe as much as 80 to 100. Hopefully, guys, enjoyed today's video. We'll be back again this weekend. I will do a JP Morgan video this weekend, and then next week, we've got Bank of America early in the week, and then obviously we've got Netflix and Tesla towards the middle of the week on July 19th. And then after that, got a gigantic week with big tech. We've also got TSM reporting their earnings next week. I look forward to bringing you them here on the channel. Until then, have a safe and fun weekend. Until next time, good luck with your investments.